Thank you so much for having me this morning, and thank you to all of you taking the time out of what I'm sure is a very busy day to be here. I am Wrynn Valentine, a Redwood Credit Union's financial wellness advocate. As a community-based credit union, RCU is proud and honored to serve 8 North Bay counties and has done so in good times and in bad since 1950. Just to let you know, during or slightly after this presentation today, you will be emailed a handout in regards to the content being presented today. It is very content rich, so I didn't want you to get bogged down in it during the presentation. So that's coming your way. I will reference it a couple of times throughout today's webinar, but for the time being, it might be useful to have a piece of paper and a writing implement just to jot things down as we go over them. But again, a full handout will be sent to you after this webinar. So with that, we'll kind of get started and talk about financial first aid. The difficult thing about a topic like this at a time like this is that everybody here today is likely in a different place, mentally, emotionally, and of course financially. Some of us are experiencing hardship like never before. Others have felt the fallout of COVID-19, but it's still feeling relatively manageable. Others might not have felt the impact yet personally at all, but maybe you're just kind of positioning yourself for what happens if things come down in the coming months. No matter where you and your household are right now, dealing with financial hardship is absolutely extremely stressful. Especially if you're feeling a crunch, it can be tempting to just ignore bills. However, not surprisingly, this is probably not the best way of going about it. The consequences of ignoring bills are almost infinite, but most definitely can include, first of all, higher interest rates on debts like credit cards. Those interest rates for late payments can go up to about 30%, and that really tacks on very, very quickly. Secondly, late fee charges. You know, there are some debts where if you're late, we're talking $45, $50 for a late fee. Sometimes those fees can actually be more than the minimum requirement due each month. So that's adding more to the pressure. Third, credit report damage. Most of this damage that's done to your credit report will last for about 7 years, well after we come out of COVID-19, after hopefully we come out of any resulting recession. You don't want these things to stick with you for longer than the actual cause does, as much as possible. Fourth, repossession of any collateral that's securing your loan, homes, cars, so on and so forth. Generally speaking, your lender does not want your stuff. They didn't choose it, they didn't buy it, they simply gave you the money so that you could have the things that you wanted and you needed. It's usually easier for them to let you keep it, but only if you're not ignoring them and ignoring that debt and its existence. Loss of services is something that can often be a huge repercussion of ignoring bills. There are some services right now during COVID-19 that are granting leniencies, and we'll talk a little bit about those later, but not all of them are. And even those that are granting leniencies, you still need to be proactive in interacting with them to see if you qualify and go ahead and initiate those leniencies. And then last, certainly not least, wage garnishment. It seems kind of silly that, if you're ignoring a bill because you feel like you can't afford it, that they then take money that you're not paying because you feel like you can't afford it. But what wage garnishment does is it really takes away any choice that you have in regards to what you do with your money, the money that you do have access to, and how you use it to protect and keep yourselves and your loved ones well during this time. So ignoring bills, generally speaking, probably not the best way to go about dealing with hardship. Instead, the most likely way to come out of hardship is to take action. Not to sit back, but to do quite the opposite. The best way to handle a financial crisis is to first review and adjust your budget. Then prioritize your financial obligations. And last but certainly not least, communicate with your creditors. Do not ignore them. You may not be able to pay all your bills in full right away, but by taking a proactive approach to your finances, you can try to minimize the consequences until you get back on your feet. So, when it comes to reviewing your budget, the first step is to assess your income. If your expenses exceed your income, you'll not be able to gain control of your financial situation until you make your changes. So we will talk about expenses, but first things first, you got to know what you have coming in. So first, record all of your sources of income, including realistic expectations of income that you will be receiving soon. I know a lot of people that have filed for unemployment have been waiting 3-4 weeks for that card to come in the mail. But if you've gotten the approval for that email or snail mail that you will be receiving that is a realistic expectation of income, and that is something that you should take into consideration. So when you get the handout via email later, you can use chart on page 1 of the handout. It's going to look something like that. It is really important to consider all of your different forms of income. The thing about budgets overall, in good times and in bad, even if you don't consider all your income, it's still gonna get spent just on stuff that probably doesn't matter as much. When you map it out, when you take it all into consideration, you'll be better able to disseminate it in meaningful ways. So beyond recording all of your forms of income, you can also think about ways that you might be able to increase your income. Some of those are not as easy right now in the COVID landscape. Renting out a spare bedroom. For me, I don't have a spare bedroom, so COVID or not, that might not be feasible. Part-time work may or may not be feasible given your lifestyle. Some of these other items may or may not be feasible, but it is up to you. You're the one that knows your life and knows your situation to determine how you might be able to increase your income. Next, you got to list your assets. Those things that you own in full or that you have partial ownership of and that hold value. There is a chart on page 2 of the handout that you'll be getting later today, and that looks like this. Very simple, just listing of your different assets. Liquidating assets can be one way to pay for immediate expenses, but be sure to consider the cost before doing this. For example, withdrawing money from a 401k can result in taxes and penalties, sometimes of up to 45% of the amount withdrawn. However, in this particular instance, while we're dealing with COVID-19, much of these penalties are being waived. But even with that, if you take that money away, you're leaving yourself less money for the future and potentially missing out on significant earnings as the stock market hopefully rebounds. So while this is only one way to save your home or pay for your medical insurance, it might be of value to you, but it's really up to you and your financial advisor. You definitely want to chat with somebody about your particular circumstances before you take any such action. Beyond liquidating things, there are certain items that can be just borrowed from. Again, something like a 401k, an IRA, certain life insurance policies. Those things may be borrowed from. Do be aware that there are repayment terms and all of that, but that is one way to simply fix potentially what you've got going on now, and then replenish at a time where your finances have rebounded and have gotten back to a more normal state. Next, we've got the expenses. At this point, you're going to list what you're currently spending your money on. For many people, increasing income is not practical, but almost everyone can reduce their spending in some way. just look at the ways so many of us have naturally changed our spending since the onset of COVID-19. And for a lot of us, that might have not even been a conscious choice. Imagine what you can do if you sit down and you look at the whole picture of your personal finances and you make conscientious choices about where to pull back some spending. So on page 3 of the handout that you're going to get, it'll have you write down a bunch of monthly expenses. Believe me, what's shown on your screen is not the end of it. That's not what we expect all of your monthly expenses to consist of, but that list does go on. So you write down what you currently are spending. Take a look and prioritize. What can be reduced? What can be eliminated? What might be able to be postponed or substituted or simply pulled back on, making partial payments on while still keeping you financially well? And as you consider that, there's another column on that chart that has you looking at your proposed amounts. So that way you can compare what you're currently doing against what you feel you could do to kind of rein in your expenses a little bit. Next, the dirty four-letter word of debt. When you're experiencing a bill paying crisis, or even when you're not, it can be really depressing sometimes to think about how much or how many creditors you owe. But it's essential that you take an accurate inventory of your debt. Open all your bills, whether you want to or not. And if you need to, call your creditors to verify your current balances. If you feel like something isn't accurate or might be out of date, having accurate information is really important as you're dealing with your financial picture. There is a chart that'll be on page 4 of your handout that allows you to list your creditors' balances and monthly payments. And again, this one is much longer in the actual handout, so don't feel weird if you have more than the 5 spaces listed on your screen. There are about 20 or so on the chart itself in your handout. So we've looked at your income, we've looked at your assets, your expenses, and your debt. This is kind of all the different puzzle pieces you typically need to really put together that whole picture of where you stand financially. So we need to bring that all together and figure out if the changes you're proposing to yourself, if that's going to stabilize your financial position. So using the information on the charts, this is another chart that'll help you kind of position all the information that you've already come together with. You're going to subtract your expected expenses, not your current, but your expected, and your debt payments from your expected income. Again, expected, but it all has to be very realistic, not hopeful. If you have a surplus, you're in good shape. If you have a deficit, it's now time to really look over that budget, all those expenses, all those debts, again, to see if there's anything else that you can change. As you look at those adjustments, it can take time and further adjustments as you figure out what is currently feasible, what your financial picture looks like now, and the feasibility now is probably very different than it was just 60 days ago. So got to take a look at that. And you may not have enough money to pay all of your bills immediately, just to be perfectly transparent and honest. If it comes down to that, you may have to make a difficult decision, and that is what bills will go unpaid or at least not paid in full. So before we move on, if you have a piece of paper and a writing implement, there are a couple of examples on the screen right now, but that's just kind of a general thought. I want you to list 3 of your bills in your life that are the most important. What do you say are the 3 most important bills for you to prioritize? So just jot that down real quick. And next, if you're not done, that's okay. Feel free to finish up at any point. But next, I want you to list 3 bills that you know you have, but if you didn't pay them for a little bit, it wouldn't be the end of the world. It wouldn't really affect the physical, mental, emotional well-being of yourself and your family. What are 3 bills that might be able to not go by the wayside per se, but that you could take easy on yourself for a little bit? All right. So, whatever you wrote down for yourself is totally fine. You know your life better than anybody else does. But most typically, the bills that really are typically at the top of the priority list for most of us are the bills that you have to pay in order to take care of your essential needs. Housing, basic utilities, medical, food, that kind of stuff. The stuff that without which we would not be able to pursue our work, our mental and emotional well-being, and physical well-being. Also, another thing that you want to keep in mind is the bills for which non-payment, where the penalties can be a little bit severe. Child support, back taxes, alimony, things like that. A lot of stuff where the government is involved, the courts are involved, those are things that you really need to take a significant look at if you're having a difficult time paying your monthly bills. So, at this point, you've taken a look at what really can't go by the wayside, what can take a little bit of a break. But either way, for the things that are highest priority or least priority, like we talked about, none of them should go ignored. So for any bill that you cannot pay in full or feel you won't be able to pay in the future, you should contact the creditor or service provider immediately. Some might not do anything. Some make you wait until you're in the throes of hardship, but some are actually willing to help consumers facing hardship before it actually becomes a real issue. Either way, at least you will have been in contact with your creditor and they know that you're trying to be proactive. So the slide in front of you shows some tips to keep in mind when communicating with creditors. Number 1, be specific and honest about the reason for your hardship. Right now, that is relatively easy. We're all facing some kind of impact from COVID-19, and it's not a surprise to anyone. So be honest, be real about that. They're going to want to know what happened so they can get a picture of what they can do to help you that will actually help. There's really no point for a creditor to go through all this process if what they're doing to help you just winds up in you calling them again in another couple of months saying, hey, I need more, or what I'm doing isn't working right now. They want to get a sense of what can actually be done that will have impact in your financial well-being and keeping on top of their debt, even if that's modified debt. Number 2, have a plan for the future and be willing to share that with them. Let them know that you're making changes so that you can resume paying your bills. Your proactivity here shows commitment. Imagine anybody that's ever come to you with a proactive plan of something, whether it's something difficult or something really great. When people show proactivity, it means that they're thinking ahead, that they're not just flying by the seat of their pants, and that they're thinking about the impacts of their actions. And that can be huge when dealing with a creditor. Number 3, remain calm and polite. When we're calm, this sounds obvious and easy, but when we're in the throes of financial hardship, of dealing with somebody who maybe, doesn't know our lives or is dealing with this every day, it can be easy to get upset. But for them, they deal with this all day, every day, and it's hard on them too. So being calm, being polite, being kind, just like you would want to receive from them, you give to them, and they're much more likely to want to help you if you're treating them like human beings, just like you want to be treated. So that whole golden rule thing, it comes into play even when dealing with creditors. Number 4, don't make promises you can't keep. It can be easy to want to just jump at whatever opportunity a creditor provides you or offers up first thing, but again, that's really not going to be the best thing for you. In some of these cases, you might have to go through a phone tree. You might have to wait on hold for a while. This might be the only chance you get to speak to your creditor about renegotiating terms or whatever the process looks like in that instance. So if there's something that you feel like you can handle, I can do $20 a month. That's what I can do. Then put that out there. Don't just let them say, well, we can take you down to 50 and think, oh, well, that's better than what it is now. If that's not going to be helpful to you, then see if you can really be vocal and polite about what it is you're prepared to work with them on. Number 5, keep a record. After every conversation you have, every email you have, whatever the communication is, record the date and the time, the name of the person that you spoke to, any promises they made to you, any promises you made to them. That way, you at least have an ongoing record of what the conversation has been, and that can help keep you on track, especially as you're dealing potentially with multiple creditors. We don't want you to get confused. We don't want you to take any leniencies that they've granted and apply them to somewhere else. To keep it all on track and straight in your mind can be really helpful. So keep those records straight for yourself. And number 6, be persistent. I think it's going to be pretty rare these days that you have a customer service representative that says that they can't do anything. That this is probably the most of the calls that they're getting. But if somebody says that they can't do anything, go ahead and kindly ask to speak to a supervisor. And if for some reason that doesn't work, it is possible to send a letter. Actually, on page 6 of the handout that's going to be emailed to you, there is a sample hardship letter that you could essentially duplicate and send to those creditors that you're unsuccessful getting a hold of via phone or more immediate means of communication. Typically, the sample hardship letter or the hardship letter in general, it is snail mail most typically, so more immediate forms of communication would probably be beneficial, but that is possible if those immediate forms of communication are not working out for you. So next, we've got different types of bills and how to handle those. So first of all, because it is of highest priority to most people, let's talk a little bit about handling your housing payments. Whether you rent or own, making your housing payments should usually be your first priority. Though some leniencies have been implemented as the result of the pandemic, it is possible that if you don't pay your mortgage, your house could be foreclosed on. If you don't pay your rent, you could be evicted. Again, those leniencies that are granted as the result of the pandemic, those are temporary, and they vary from place to place. So, and from lender to lender and from landlord to landlord. So you definitely want to be really on top of those options. If you find yourself in a situation where you just can't keep up with those payments, contact them right away. Right away, even if it's just looking like a possibility. Again, some of them, they won't do anything until you're in the middle of hardship, but a lot of them, they can be forward thinking and try to work with you on how to protect you from that full-blown hardship. If you're worried about the long-term affordability of your mortgage or not particularly attached to your house and your financial need is not immediately urgent, selling might be a possibility. There is still activity going on within the housing market during this pandemic. People are still buying and selling, so that may be a possibility. However, I wouldn't be shocked if there were sometimes some difficulties attracting a buyer. In that case, the lender might be able to offer a couple of different options, anywhere from a deed in lieu of foreclosure, where the house is essentially given back to the lender, or a short sale where the house is sold for less than the amount owed on the mortgage. However, in some of these instances, first of all, these do take time, so it may not be a help in the immediate future. And in some of these instances, it does not resolve the financial obligation for any balance that's left, certainly now or in the future once they're able to resell the house. So those are some things to keep in mind. If you do want to stay in your owned home, refinancing could be one way to bring your mortgage current and get better terms. However, it can be difficult to do that if you've got a low credit score, or if you're experiencing cut hours or unemployment. Most lenders, even for a refi of a currently owned home, they do require that you have income to be able to pay that loan back. Let's see. Also, equity there can be a bit of an issue. If you haven't built up equity, this is a difficult market. As we deal with COVID-19, many lenders are offering partial payments or deferrals or forbearances for a specified period of time. The thing with this, different lenders are they've got different terms in place. You know, a forbearance is typically different than a deferral, and it's important that you understand your lender's terms before you agree to any of it. Ask about balloon payments, you know, how this payment is being redistributed, or how these missed payments are being redistributed. Make sure that you understand. Don't be afraid of their jargon if they should use it. Ask, because this is your home, and this is potentially your livelihood, and they need to be clear with you on what is expecting. If you're a renter, again, getting in touch with your landlord as soon as possible is really important. They're the ones that are probably dealing with the mortgage side of that property. So if they need to do any work on their end for the mortgage of their home that you're currently living in, giving them that heads up is really going to be beneficial. Besides that, they may allow you to pay partial monthly rent. They may, again, give you a deferral if they're able to do that. If it doesn't come, if those options don't come to fruition, it may be necessary for you to look for a new home. Again, that can be difficult in a pandemic, and certainly in the housing market that we have, but that might be something that comes down to it. But if it does come down to that, be careful of where you are in your lease. If you lease your home, even if you move out, you may still be obligated to pay that lease. Some landlords will allow you to break a lease if they've got another qualified renter waiting in the wings, but that's something that you would very clearly need to work out with them to get out of that contract. All right, so moving on from housing, talking about cars. If you have a car loan, that is a monthly bill that you're expected to keep up on, and in many states, a car loan will be considered delinquent and repossessible after one missed payment. Most lenders give a little bit more leeway. However, by law, they could do it much earlier if they wanted to, after one missed payment. So in that case, you want to call your lender. Lenders, they're sometimes willing to extend loans to cover missed payments or set up repayment plans. They might also talk about refinancing the vehicle. Again, as long as you are still working, you do still have income, or straight up selling the car. Again, that might be a little difficult in the COVID landscape that we're currently dealing with. Some people choose to give the car back to the lender, known as a voluntary repossession. What this means is that they're then able to sell the vehicle, but most typically that does result in the original borrower, you, being responsible for any funds that they are not able to recover by selling that vehicle. So, and it does still show up on your credit report. So voluntary repossession, while they might grant some leniencies because you're not making them, get the tow truck and find the vehicle and all that, it does not negate the debt completely, potentially. Utilities. Delinquent utility payments can cause your service to be suspended or terminated, but some utilities are more important than others, obviously. If a service is not needed and cannot be paid, you may want to just cancel it. To be perfectly honest, I've been looking at canceling my cable for years. This might be a reason for me to do it. If a service is needed, call the utility company and ask about payment arrangements. You may not have to pay the full amount owed right away. They might allow you to defer some of the payment. You can also see if they have any payment assistance programs for people facing economic hardships. For example, the state of California, there's an executive order that's been signed to prevent water shutoffs for non-payment during the pandemic. Charges will still accrue, but they will not shut down somebody's water for non-payment as an essential life service. Governor Newsom signed that executive order. Also, PG&E has the CARE and FERA programs to reduce energy costs. So those are just a couple of examples of things that that could be useful to you if you're facing hardship and looking at what utilities are necessary and where you could find a little bit of leniency there. In terms of insurance, it's best to work with your current carrier to prevent your policy from getting canceled, because if it is, you might find it difficult to get reinstated, or you might have to pay a rather large fee to get reinstated into your existing policy. You may be able to lower your car insurance premiums by increasing your deductible, and if the car is older, you may even want to switch to liability only. Especially for those people that are working from home or are working less, or they're just not driving a lot. That makes a lot of sense right now. So that might be kind of a first shop for a lot of us that do have cars and typically did drive a lot. When it comes to life insurance policies, it might be a little tempting to go ahead and let that lapse. They can be a little on the pricey side sometimes. And now might be a really good opportunity to really look at that. Is a life insurance policy really meaningful to you at this point? If you don't own your home, if you rent, or if you've paid off your home in full, if you don't have children that you're financially responsible for, so on and so forth. Those are some reasons that some people consider that life insurance may not be as meaningful in their lives as they once thought. So it can be a really good time to look at that expense and that possibility. If you do have a cash value life insurance policy, you may be able to use some of the cash value to pay your premiums themselves, or switch to a term policy, which is usually quite a bit cheaper. Reducing coverage instead of canceling the policy completely may be another possibility. Either way, no matter what you choose to do as you're considering, definitely recommend discussing it with your insurance agent that kind of knows your full picture in regards to insurance, your family, so on and so forth, and get their input as to what they would recommend for you in terms of any changes to your insurance. Health insurance. Health insurance is a big one, and probably very prevalent in a lot of our minds given the pandemic. Some people have it paid for by their employers, some don't. The premiums for a standard policy can be huge, absolutely huge. And if your income is below a certain amount, or if you're pregnant or disabled, you could be covered through Medicaid or a state health program. If, however, that's not an option and you can't afford the premiums for regular policy, you might want to look into catastrophic medical insurance. This particular kind of insurance covers major medical events, hospital stays, those kind of really big occurrences. So those premiums tend to be more affordable. They will not cover, smaller things like I think I might have any kind of sickness and I just want to get checked. But hopefully that those options are becoming more available to all of us. Next, we've got unsecured debt. This is kind of always a weird one because there's no collateral. There's nothing physical behind this debt, really, not as far as the creditor knows. And here, paying your mortgage or rent, of course, is more important than paying, say, a credit card bill. But you got to keep in mind that neglecting unsecured debt, especially if it's done for a long period of time, it can result in collection and legal actions as well as credit report damage. And that doesn't seem like such a big deal right now, but hopefully as we come out of this, as we reestablish ourselves from financial hardship, that does become a little bit more tangible almost. So many creditors, when it comes to unsecured debt, do offer hardship programs, maybe short-term payment arrangements that will allow you to make smaller payments. They might lower the interest rate on your debt, so on and so forth. With unsecured debt, it is a little bit more flexible. Depends on that creditor, what they're able and willing to do. To help you get through that. So being in contact with them, and again, keeping in mind what can you handle each month, especially with unsecured debt. There's no need to overshoot it. Student loans. So here's where some really good news comes in. If you have student loans, in light of the current situation, all federal student loan services have been directed to grant an administrative forbearance to any borrower with a federally held loan who requests one. Anyone who requests one with a federally held loan. The forbearance will be in effect for a period of at least 60 days beginning on March 13th, 2020. To request this forbearance, borrowers should contact their loan servicer online or by phone. So as you might have been able to tell, I did take that off of the Secretary of Education's website. So nice official proof that you can get out from under your student loans during the pandemic. Outside of COVID, borrowers experiencing financial difficulties with student loans can often get a temporary suspension of payments through forbearance or deferment. Plus, some borrowers may qualify for lower payments through an alternative repayment plan, such as income-sensitive repayment plans. Student loans can be really flexible that way. So if you're behind, you might be able to become current by consolidating your loans. If you're already in default with those loans outside of COVID, borrowers with public student loans do have a one-time right to get out of default with a reasonable and affordable repayment plan. So you can undo some of what's been done once during the life of your student loan. So as we mentioned earlier, those things that involve the courts and the government, those can be a little bit stickier. Child support and alimony are not expenses that can be easily reduced. If there's a formal court order in place and you want to have the payment amount modified, you do have to go back to court. It's likely that you'll need to have the assistance of a lawyer or at least a legal typing service, and you need to keep in mind that modifications are not retroactive. You are responsible for paying the full amount of all past due payments when it comes to child support and alimony. When it comes to taxes, the IRS is generally willing to work with taxpayers who want to get back on track. Of course, I mean, this is just kind of an ongoing mantra when talking about back taxes. If you haven't filed in past years, you do need to do so right away. It is a crime to not file a tax return when you owe taxes. If you can't pay the amount owed in full, you might be able to set up a monthly repayment plan or establish an offer in compromise, which is a settlement of the debt for less than the full amount owed. Ask your tax professional about the IRS people crisis specifically, and is intended to provide immediate relief to people facing tax issues. So even the IRS is looking at ways to try to protect people from tax issues while the COVID pandemic is happening. So after you've spoken to your collection or your creditors and talked to them about how to reduce your absolutely immediate needs, if you're not able to accommodate them, and they're not able to accommodate you, it then may come to the point of being a collection item, where either that creditor is attempting to collect from you, or they've passed it along to an actual collection agency. At this point, most creditors, they hold off on this for 30, 60, maybe 90 days. But at this point, they will try to get in contact with you more aggressively. Sounds a little negative, but more proactively on their side. At that point, they of course do need to contact you to see where you are, where you stand. But at that point, you are still protected. The Fair Debt Collection Practices Act protects you and your work environment, your home environment. As you can see, it protects you from collectors calling you multiple times a day or at inconvenient times. They cannot call when most people would be sleeping, all that kind of stuff. They are prohibited from contacting you at work if you have notified them that your employer is not okay with that contact. So that is definitely something that you would want to provide to them via writing and keep record of. They are not allowed to let a third party know that they're trying to collect a debt from you. That is your personal financial information, and beyond saying that they are from XYZ organization and that they would like to speak to you and have a call back, they should not be letting out any of your other personal or financial or account information. And of course, they are absolutely prohibited from using false threats, obscenities, racial slurs, insults, any kind of degrading language is just absolutely not acceptable. So do know that if you are contacted by creditors, that you do have these protections by law. So, oh, and sorry, with that, there is a sample cease and desist letter on page 9 of the handout that will be sent to you later. When it comes to rebuilding credit, I want you to take a second and think of the last time you checked your credit score. How was it? I don't actually want an answer. But chances are, if you're facing financial hardship up to and including some of what we've talked about today, your credit may suffer a little bit. That's okay. You're not alone in that. That number means a lot when things are good, when things are moving forward, when you're looking at building your life and getting more of the things you want and need. But in this time, if you're dealing with financial hardship, having food in your stomach, protecting you and your loved ones, that is more important than your credit. However, at some point, we will get back to a point where you can look at rebuilding that credit. As I mentioned, late payments and other negative information can remain on your credit report for up to 7 years. And no one wants to have a bad credit score, but if you have the capacity to make the payments on time and in full, even during this financial hardship, please do so. Don't take a creditor's offered forgiveness or leniencies just because, hey, it sure would be nice to not have to pay that bill. If you're able to pay those bills, go ahead and do so. But because that will affect your credit if you get into a spot where it's difficult. Once you've gotten through this financial crisis, you'll hopefully be in a better position to work on rebuilding your credit. Make conscientious decisions when it comes to that. Making your payments on time, getting back to that, keeping your balance on revolving debt low. That will help to up that credit score once again. If for some reason all of your accounts needed to be closed, you need to look into opening new credit. The weird thing about credit is you have to have credit to get credit. So keeping that going, having that in your back pocket, literally and figuratively, will help you in rebuilding your credit. At that point, if you do have a low credit score, you may need a cosigner to get approved, but there's also secured credit cards where you have money on deposit, and that's what's used kind of as collateral to get the secured credit card that would not require a cosigner. So those are some options to rebuild credit if everything is closed out, or if your credit score sees a significant decrease. And again, you're not going to be alone in that. Saving. So talking about saving at a time like this is really poignant, but also really difficult when people are needing to access their savings like they never have before. To talk about start saving or to continue saving is a little difficult. However, it is like a muscle, and we need to use our muscles in order to keep them going, in order to get them stronger when we're ready to do so. So when it comes to saving, technically experts recommend 3 to 6 months worth of essential living expenses at this time, and besides this time. That might seem a little bit of too big of a mountain to scale at the moment. It really is about just doing it, taking some money, whatever amount is doable for you, and practicing saving, putting that away in a savings account. Not only does it help you to build that muscle and make sure that that muscle has muscle memory, but if maybe this month you had 20 extra bucks and then next month you're short a little bit, well, now you have the previous month's savings to help you with this month's shortfall. It doesn't have to be a lot. So while yes, however long in the future, we would love to say, I have 3 to 6 months of essential expenses saved up. For next month, make it, 2 hours worth of pay saved up. Whatever it is to you, just start and continue saving. When the financial crisis is over, that's when you can take a new look at it and say, okay, here is my new normal. And here's what I'm willing to lay out in front of myself, and what I'm willing to commit to myself and to those I'm financially and emotionally responsible for. And here's what I'm comfortable committing to. Because really, nobody can make you save. It really is all about you. But I imagine that a lot of us, especially at the beginning at the onset of COVID-19, we really wish that we had had more. The only way to change a wish into reality is to actually do it. So even during times of financial hardship, we still have to keep that in mind and keep that practice going. One other thing I do want to add to this: if you're able to continue saving towards retirement during this time, please do so. Again, that feels like, well, that's future me's problem. That me has bigger problems. Not saving for retirement, that's future me's problem. but that's going to be future you when you are potentially less able to deal with it, to rectify it. So continuing to save as much as is possible during retirement should maybe also make its way into your budget almost as a debt. You owe yourself the ability to retire comfortably and in a meaningful and reasonable amount of time. So today's content was provided to you in partnership with Balance. Balance is a financial education and counseling service. RCU pays for this service. It does offer one-on-one counseling for our members and content such as this online over the phone. It's a great partner if you are a Redwood Credit Union member. So we really appreciate Balance's proactive approach to things like financial crisis. If you're looking for someone to speak to about your personal stance right now, this can be an amazing resource for you. And then Redwood Credit Union, we are, like I said, proud and honored to serve the 8 North Bay counties, as far south as San Francisco, as far north as Mendocino, as far east as Napa. And we're just so glad to serve, let's see, 275,000 members within our shared communities, and we're so grateful to ILEA, the services that you provide when times are good, the services that you provide when times are difficult, and we hope that today's content kind of gave you some insights as to what's available to you, and how you might best proactively pursue your financial well-being. We are looking forward to serving you as much as we possibly can now and in the future, and wish you the very best as we all make our way through the COVID-19 crisis and any financial hardship that might befall any of us individually or as a shared community. So thank you so much for being here. I think we have a couple of minutes for questions if there are any, but if not, I do want to say thank you so much for having me, and we at Redwood Credit Union wish you the absolute best of luck.
Are there any questions for Wrynn? Okay, thank you very much for your comments. Thank you for your time, Wrynn. We do have a future programming on May 28th. It's an afternoon reset. Guided meditation at 1 p.m. with our yoga teacher, Alicia Parks. She's also a photographer in the community. And then we'll have our quarantine beauty happy hour at 4 p.m. You're all more than welcome to join. You can see our signups on our website. Thank you for joining us. We'll see you again soon. Thank you. Bye. Yes, the worksheets and slide and presentation will be available. We'll be emailing it to all our attendees today, and also it'll be on our website. We'll be posting that soon. Thank you.